3 reasons why experts are now saying the cycle top is in till they see another crazy pump, and then their tune changes. So these experts. Bitcoin, crypto, morning tea. Hey. Good morning, everybody. My name's pianomattyb. That is Scaramucci's. This is your morning TA. Brief glimpse into the crypto market, where the sun's shining, where the wind's blowing. Oh, the humble opinion of this piano Zamboni bringing the The FOMO index has inched down to 50 from 51. Bitcoin dominance is 53.1%. 24-hour volume is 57 billion. The overall market cap, 2.25 trillion. Give or take 100 million. Well, it was fun while it lasted. Yesterday's 5% pump was all but given back, and then some. Despite some bullish moves, the bears keep on walloping the bulls back into submission. After picking out yesterday at Siggity 3.8, price action spent the day in a slow decline, amping up after midnight, crashing through both the 20 and the 50 moving average, finding a bottom and a bounce at Siggity 0.2 and has pouted back up to a dime of production, Siggity 0.6. So we broke down into our bottom channel of eternal monotony and out of our channel of dissension. Now, in order to protect any semblance of bullish health, we need price action to get back up and above this level of support, now acting as resistance at Siggity 1.8. Now that's just the price we can take the do not resuscitate sticker off the patient. The true price we need to be at or above to be having bull market conversations with respected colleagues and random normies is at or above this 200 moving average up at Siggity 6K-ish. Underneath her, and well, we're not doing so well, and we'll continue to see constant selling pressure and downward action. Now over on the ding-dong. You can see we're back playing footsie with our channel of eternal monotony support level, currently slightly underneath her. This is officially the 6th time we've challenged support, and with all challenges getting that sigh of relief bounce. But you don't want to keep playing knock-knock ginger on that old lady's house at the end of the stream. Eventually that door's gonna open up. We're also getting a little too close for comfort to this chart's 200-day moving average, which is looming down around 58.6, which is also our old channel of dissension's resistance, which would now be acting as support. Now, breaking this moving average and holding underneath her will force an uncomfortable conversation about this bull market, because if you look back to the 2021 bull run, you can see once we got underneath the 200 moving average, we were well on our way into the bear market and the denial of it, of course. But also back in the 2017 bull run, once we broke down and underneath the 200, we were officially in the bear market. And and subsequent denial of it. So just like any good 80s action thriller movie, she's getting dicey and entering the climactic hero under pressure stage. Can our economic Sly Stone or Bruce Willis fight their way back into the bull market happy ending? We know the markers and the prices. We just have to sit back, grab your popcorn, and enjoy the show. We're rooting for you, Sly Stone. Would you look at that, my friends? The sun's up. It's another beautiful day here on planet Earth. A day none of us are guaranteed. We're not guaranteed these days yet. We're lucky enough to have them anyway. So get out there and knock them dead. And remember, we're playing the same game as our psychopathic elected leads. And that's right, it's the long game. So zoom out and have a fantastic day. And we'll be going live right away, so grab yourself a coffee. Join me for a quick one, and by all means, sing it with me now. I'll run the banks of boom the shbang, Bitcoin, crypto, morning tea. Hey, cha-cha-cha-ching. More selling pressure. Bears keep coming in, walloping those gosh darn bulls. Just can't seem to get her up. That's what she said. And we almost got past, well, I guess, save for yesterday's little pump. We've been basically going down for a long time. And there's a couple ways to look at it. One, hopium and copium. The second is a little dose of reality that, I don't know, we might not want to hear. But we have to take a look at anyway. And that's when I went to write the script this morning, I mean, I almost didn't make a video because it's like, it's the same price. Really, it's the same price, right? We're kind of hovering within this $1,500 range of eternal monotony. But on this one particular, this is the 4-hour chart. She's always a little so-and-so. We don't really need to look at her. But on the ding-dong, let's move her up here so we can get a look at that sweet, sweet, sweet 200 moving average. Now, we've talked about it a couple times, 3 times. Hey, look out for this 200 moving average. Now, if we're going to look at historical data, we have to look at it, recognize it, and see what it's done before. And that's all that video was about, because we're losing 60K. We're just, one says we're at 60K, but that's Binance, blah, 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 blah. But so let's just say, hypothetically, we'll use this arrow here. We come down and we break it. You can see it. In order to break it, it would make logical sense that we come down and test our old channel of descension that we did break out of up here. We did break out of it. We thought we were out of her. Then we got back here. Oh, no, we just dipped right here. That was a wick. That which once wicked will get candlesticked. Is this thing stuck? I'm going to switch it here. Let's see. Hopefully I can just refresh her. No, Binance is saying 60.3.13 forever. One more refresh. Oh, well, anyway, back to this. It would make sense to retest this and look at this channel of descensions resistance now acting as support, if you can call it that, is right at that 200 moving average. You can't see it because of the stupid arrow. Now, if we were to break down into that, now remember, the last time we were under the 200 moving average on the ding dong, work with me here, Binance. It was right here. This was Monday, October 16th, 2023. not a year ago, but 10 months ago. Seems like forever. and we are at 27K. The last time we were under the 200 moving average. And now, save for this, what you could call the beginning of the bull market, where we just kind of made these little steps up. Besides that, the last time we went under the 200 moving average was in the 2021 bull run. This was November, is it? Yeah, November. And we crossed it December 28th. And then we were under it. Right here, we were still. Wick's wife. Thank you for the 5 Piano B memberships. Much appreciated. Amy Lives Krupa, Wake Up Waverly, Swashbuckins Callaway, Jody Ferguson with the membership gift. Perfect. Thank you very much. Much appreciated. Wick's wife. So once we are in December, we crossed under the 200 moving average. This is when denial started to kick in, and everyone was saying it and thinking it, including myself. Oh no, it's not over, because we had this little rally back up to the 200 moving average, 48K, something like that. And then we basically stayed under it. So this was January 22. We didn't cross back until a full year. So we spent a full year in the bear market under the 200 moving average. And now we busted up through it, and we look at this old wedge of yesteryear. And we broke under it briefly at 27K. That was the last time. But we were arguably out of the bear market at that point. We had spent January 23 to August, a good 6 months over the 200 moving average. Now, here's the thing about all this talk about the 200 moving average. We may not get there. So this is all just a good metric as to where not the cycle, not the macro cycle, not the 4-year cycle, but this cycle of consolidation may be nearing a reversal stage when it gets around to the 200 moving average. And that is what I think is the heartbreakingly optimistic way of looking at it, because we are cycles within cycles. It's like a Christopher Nolan movie. It's like Inception. That's why we have the monthly, the weekly, the 4-hour chart, the daily. They're all different existence within the same existence. So now that we are on the daily chart heading towards the 200 moving average, a simple bounce or even this vicinity is a good signal that we are approaching what would naturally be, under normal market conditions, a place where a reversal could come up. Now, if the sellers come in hardcore and the buyers don't come in, we will break the 200 moving average. Then we have to have another conversation. So my question to you would be, how long do we stay under the 200 moving average before we say goodbye to the bull market? We're not under it, right? So this is all just hearsay. This is all just hypotheticals. Get us into the philosophical frame of mind to start discussing it. I feel personally, based on cycles, that it's too early, and for this bull market to be over. That being said, when we take a look at the monthly chart, just take a look at the similarities of this bull run to our current bull run. They look, almost identical. Now, in order for us to have what would we call a, let's say this cup and handle pattern plays out to 129K, we would have to have an identical, if not more, a run from here just to get to 129K. And I still think, where's that magnet? Magnet's covering it up. Well, you can't see it. Jesus. There's not enough real estate on all these TVs here in my room with the walls unplastered. 129K, arguably, look at this thing is not switching. Binance, come on. Or maybe we are at 60.30 again. No, it's just not. Binance, you're the worst. It says 60.2. But this little thing here is not switching. Who cares? Whatever. Carl Elder gifted 5 pianomattyb memberships. Thank you, Carl Elder. It's good to see you so early in the morning. I feel like you've been doing something else. Maybe working real hard. Maybe doing something you got to do. But now he's back. Whoa! Thank you very much, Carl Elder, for the gifted 5 memberships. Much appreciated building that channel. Thank you very much. It helps immensely with the growth of this channel. 60.1. So yeah, so don't look at that price. It's just stuck. And of course, during a live stream, it would get stuck. You know, before the live stream and after the live stream, it'll be fine. But now that it's in the live stream, it's stuck. And these are the things that, you know, like not to get into the weeds here on the live stream, but there's. It would be nice if I was the type of content creator that, you know, just pressed live on a phone and talked into it, and that was it. That was all the tech I needed, because everything would be very simple. But man, with these prices and these charts and these things, everything's got to be set up to like this unbelievable penthouse of things that could go wrong, you know. And you know, it's no big deal that this one is, but let's get it off. It's starting to piss me off here just looking at it. So anyway, now that is the 2021. I know we talked about this in the video, but just to give you a little double dose of reality, so to speak. This is the 2017 bull run. As you can see, we were above the 200 moving average, and then so this is where the denial, this is February 18. We come underneath. And then we were in denial. Nah, it's not over. It's not over. Look, we're above it again. It's not over. Then we came back down. And arguably from March 18th until April 19th. So a solid year. We were under the 200 moving average, and then the bull run commenced. So again, that's just 2 examples of how dicey it is to get underneath that 200 moving average. We don't want to be there. We don't want it to happen, because then we have to have some different conversations about things that we don't really want to acknowledge. Because here's a dark side of the bull market peaking out. Let's say the cycle top is in. I'm not saying it is, but let's just say it is. I have a feeling that if this was the market cycle, the Bitcoin community, the Bitcoin YouTube ecosphere, if it were, people creating content, would drastically change. I think you would see people stop making content, because retail would, I mean, we haven't seen retail yet, right? So retail hasn't been back yet. And then if it goes back into a bear market, well, they'll miss, I don't know, 4 years of crypto content, so to speak. And if they're thinking that that they can't afford 1 Bitcoin, like they have to buy 1 Bitcoin like it's on the shelf. I'll take 1 Bitcoin, please. How much? Well, today it's on sale. It's $60K US. Oh, well, I don't have it, right? They don't understand that. Those retail may never come back in if the cycle top was in. Not saying it is, just saying if it was the cycle top, I would hazard to guess, and I would argue that the YouTube environment for creators when it came to Bitcoin would probably take a massive hit. I don't know if it would come back, because we won't see retail aping in. That would be, they missed, I don't know, 4 years. Well, no, let's say 2 years in the bear market, then this year of the bull market. I guess they were waiting, and the FOMO never really hit them as much as it could. So they just never got in. So just a humble opinion of this piano doesn't mean it's going to happen. Look at this. We are getting that bounce. Wick City, but you know, that which once wicked may get candlesticked is at 58 point. Did we get there? No. Is at 58.7. So we wick down to 59.5. No big deal. I think I saw Army Piper in the old chat. Check out his stream. I think he goes live at 8:30 right after this. Alexander, yeah, there it is. Piper Academy live stream right after pianomattyb. Good old Army Piper. Always got some good alpha for everybody. 60.3. Yeah, hasn't been the best of the summer, so to speak. And now here's another thing that you might not like to hear. Do you have 2 more months of this? Ask yourself that. Do you have 2 more months of, and this is what I find wild, that I would argue that we will lose more people to psychological, emotional, financial capitulation now with prices, arguably higher than they should be. So keep that in mind. Yeah, it's not 73, it's not all-time high, but under normal market conditions, we would be lucky to be 60K right now after the halving. We would be lucky. But now, I would argue that we'll probably lose more people now due to boredom, exhaustion, all the things that make people capitulate is happening now, and they're compounding because they didn't get the bang for the buck. Usually you need that blow off phase where, you get the euphoria. Now there's the fact that euphoria never kicked in is the one little thing that keeps me, it's like if the bull market is a car that goes over a cliff into water and the water is slowly filling up, and then you're just trying to breathe right. There's still a little bit of air here. This is the bull market air, and the hopium and copium, so to speak, is that euphoria never kicked in. We were never delusionally bullish. We were just you guys are early adopters, so you're just watching the carnage, the bull market carnage take place. But people weren't coming in with this euphoric, I'm going to become a millionaire and buy Lamborghinis. I didn't really see that happening. So to me, that is a nice psychological indicator that we're just in a, just like we've been saying forever, a consolidation pattern. And that's it. 60.3. Yeah, my ticker is stuck here. I'm going to do one more, try to refresh it one more time during a live stream. Not going to happen. Oh, well. So what do you think? Did you in your conversations with your Gen Pop and your normies, did you find that there was a lot of euphoria going on, or were you still kind of twisting arms? I remember it being at all-time highs. It's 70K, 72K. Still intellectually twisting arms when it came to some of the normies on Bitcoin. They still weren't in there. So we didn't hit that. I don't know, maybe it's 100K. We're talking about 100K being that price that, retail starts to go crazy. Because retail is the opposite of our investment strategy. Our investment strategy is to kind of lick our chops when it gets going down this low. If you're a true long-term investor with a low time horizon, when the prices go down to where they are now, you start, that meme, that black guy behind the tree going like, this is what we, as long-term, low time horizon investors, we start licking our chops. And, if it goes down lower, we start salivating and drooling. That's why we're in, borderline insane. So that's what's going to happen. I know I would be a little bit excited. To me, I'm like one of the extremes. If we're going to have a bull run, we'll get moving. And, if you're not going to go up, we'll get going down. I would rather be taking everything I got, collecting my pick-a-pop bottles in my garage, stacking them in the old Mountain Dew glass bottles that we drank 30 years ago, taking that back to 7-Eleven, getting more money to put back into these low prices. But when it's just sticking here, tick, 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 this is the hardest place to be. Personally, it's harder for me
in this consolidation phase than it was in the bear market. I felt like there was more to talk about. There was more hope to attach ourselves to when there was less upside, if that makes any sense at all. You know, when we were in the doldrums of the bear market with price just getting beaten down, it was a lot easier to exist. You know, now that we're up here and price is consolidating, well, it's arguably a lot harder for me anyway, because I would rather it go down than sit here in this range. Go down, knock, like one might say that this is what the market does best. It knocks everybody out when you least expect it. And you can feel it. It's weird because we're all internet empaths to a certain degree. I don't talk to anyone outside of, this live stream regarding crypto or Bitcoin. I might have a conversation every now and there, but I still feel the sentiment of the market, even though I'm absorbing it through this live stream. And it's not like your comments are doom and gloom. You know, everyone gets it in this community, but I still feel the general macro sentiment is very low. And that is a perfect time for a last washout, right? So all those people on the fence, you know, those fence walkers that, geez, I don't know. I bought in at 62K and it's down to 60. I can't take it, right? Wash those people out. And then maybe we resume this bull market. But I'm here to tell you, and you might not like this, it's not going to happen right away. I mean, this is what I'm going to say. This is my prediction for the next leg up. September. So what does that mean? That means about 7 more weeks of absolutely nothing. We got 21 over on Rumble. Rumble, the little channel that could, and 138 via YouTube and Twitter/X. Putting us at about 160 viewers on this Wednesday morning in the doldrums of the bull market. Anyway, you guys have a holiday tomorrow. It's July 4th, Independence Day in the US of A. So enjoy your holidays, and maybe we'll see you Friday. I'm not sure. I gig on Thursday night till 1 a.m. So the chances me making production videos on Friday are very rare. I might do the live stream, or I might just enjoy a 2-day holiday. I'm not sure, but I hope your holiday tomorrow is as unbelievable as you think it might be. Have a good one.
Make sure you like and subscribe.